Are you thinking about financing a home purchase and want to learn about FHA loans? Because that's what we're going to talk about right now. Hi, I'm Teresa O'Connell with Keller Williams NJ Metro Group, here with Nick.gaviria of Movement Mortgage, here to talk about FHA loans. Nick is a senior mortgage loan officer with Movement Mortgage. Nick, can you tell us a little bit about the work you do?
What I do is I pre-approve borrowers in the beginning stages. What a pre-approval is we take a look at your income and we take a look at your debt obligation, and knowing the two, that's how we determine how much you qualify for. And I do that by verifying your pay stubs, your W-2s, bank statements to show that you have enough for down payment and closing costs. And then we also do a credit check. We want to make sure that you're credit worthy, but more importantly, the credit report shows us your debt obligation. And like I said before, knowing those two things, your income and your debt obligation, that's how I know how much we can get you approved for.
What are the characteristics of an FHA loan?
So some characteristics of an FHA loan are that you're able to put down 3.5% of the sales price.
What are the criteria that make them different from a conventional loan?
So there's a lot of things that are different in regards to an FHA and a conventional loan. FHA is known to be a little bit looser with some guidelines. For example, you're allowed a higher debt-to-income ratio. What that means in simple terms is that usually you're allowed to qualify someone a little bit more FHA than what you normally would conventional. So depending on how tight the loan is, that'll help determine, if we had to go FHA. FHA is also a little bit looser on the credit score. So if your credit is a little bit lower, below a 640, your loan is going to price out better FHA, meaning you're going to have a better interest rate, and maybe possibly cheaper mortgage insurance. So FHA loans, opposed to a conventional loan, you have to occupy it as a primary residence. So another difference is with mortgage insurance. You always are going to be paying mortgage insurance on an FHA loan versus a conventional loan. Your loan amount will always be slightly higher on an FHA loan because part of the mortgage insurance is actually enrolled into the loan. It's called an FHA mortgage insurance premium. So you will sacrifice a little bit of equity with an FHA loan, and as well as pay monthly mortgage insurance. It will never drop off. It is with mortgage insurance is on FHA loans for the life of the loan. FHA only comes in a 15-year fixed and a 30-year fixed. As stated before, there are no adjustable rate mortgages. Another great feature about an FHA loan is that 100% of the funds for closing can be given by a gift donor. A gift donor must be a relative. It cannot be, your best friend. So we definitely want to make sure that it's coming from a relative first. But as opposed to other loan programs, 100% of your down payment and the closing costs can be given to you in the form of a gift.
What does a borrower have to provide when getting the loan process started?
So at the time of application, meaning you have a subject property, you're under contract, what I will need is your fully executed purchase contract. It means it's signed by you, the sellers, and all parties involved, the realtors as well. And I will need your updated income documents, your most recent pay stubs, your most recent bank statements.
What determines the interest rate that the borrower might be eligible for?
The loan program is one of the variables when pricing out a loan. And pricing out a loan, I mean meaning an interest rate. Another thing is the credit score. Someone in a top tier credit with a 750 credit score is going to get a better interest rate than someone with, say, a 650 credit score. So your credit score is one of the largest variables when pricing out a loan. Another thing is your loan to value ratio, or other known as your down payment. So what are you coming to the table with? A borrower that's putting down 30% is going to have a lower interest rate than someone putting down 5%, the minimum. So keep in mind interest rates are risk-based. So when you're looking at two loans, a borrower with a lower credit score putting down 3% is going to have definitely a higher rate than that person with that 750 credit score putting down, say, 30%. The last thing is the market. This time last year, rates were closer to a 5%. And someone getting a 4.75 may have been a low rate at that time. The market, along with your credit score, may also may have the largest impact on pricing out the loan.
How long does it take from application to approval?
How long does it take from loan application to approval? That's a great question. I've done loans as fast as 10 business days. I know that sounds insane, actually, but as long as the borrower, meaning you, are quick with getting me what I need to close the loan. Some examples are of conditions, which once your loan is approved, becomes approved with conditions. For example, you'll need to order the appraisal. If you're delaying the ordering the appraisal because we're waiting on inspection issues or things like that, that'll prolong the process. If you're taking a while to insure the property, that will prolong the process. Other conditions could be showing that your initial deposit has cleared your bank account. If the seller is delaying depositing that check and it hasn't cleared your account and we can't verify it, we can't clear the loan. So when the list of conditions that we get post-approval, how quickly can you get those to me? That will determine how fast we can close this loan. And there are a lot of things that can trip up the loan approval process. It's very important that you also have any other documents that you owe your loan officer. And again, in most cases, it's going to be the updated pay stubs, updated bank statements. If you are not submitting those things, you will have a delay on getting your loan approved. An underwriter cannot underwrite a file when they don't have the documents needed to underwrite.
Does the lender provide a list of expenses before the closing?
Yes, the lender does provide a list of expenses. This is called the loan estimate. So pretty much day one, we have a fully executed contract. I keep saying that. We submitted the loan to underwriting. Now the loan is disclosed to you. What that means is you're going to get about a 70-page packet with a bunch of disclosures. The bank is protecting itself, and also it wants to make sure that you're fully informed on what's going on and what you're doing. You're acknowledging the fact that you're under contract and you've opened up a mortgage application. So within these disclosures is a loan estimate, and that's the one where most people will spend most of their time on because it has those expenses due at closing. It's called a loan estimate because it is an estimate day one. I'm not the title company. Although I'm disclosing the fees to you, they're not necessarily all the banks. So there's a title company involved. There's an attorney involved. You will bind your homeowner's insurance. I'm not an attorney, a title company, or your insurance carrier, so I won't actually know what those fees are. I will give you a good estimate so that you can see what it looks like, in a lump sum. You'll have an idea on what the cash to close will be. But as far as line for line being exact, you will not know that probably about a week from closing. Once the loan is cleared, the settlement agent, which is with the title company, is going back and forth with the bank closer, who's basically going to make sure all the closing documents and all the fees are finalized and correct. They will come out with a final approved closing disclosure, and at that point in time, you'll know exactly what you're going to be bringing to the closing table. In the beginning stages, it's an estimate because a lot of these things are just not done yet. Therefore, we don't know what these fees will be.
Thank you, Nick, for sharing this with us. We appreciate your time.
Yep. Thank you so much for having me. It was a pleasure speaking with you and everybody watching. So please reach out to me if you have any other questions. Use me as a resource. Thank you.
Thank you for watching our FHA loan video. If you'd like to see more videos, please subscribe.